Hey, it's Dave here at Zebulon Tax, and what we're going to be talking about today is 10 things that you missed for your taxes that maybe you could still try to get. And if you haven't done them, give us a call. We can always here to help you. These are 10 overlooked tax mistakes that people make when they do their tax returns, okay? The first one is really, really big. It's retirement plans. In the retirement plans section, there are literally 10 different plans out there. Everyone's heard of the 401k or 403b. Yay, that's awesome. But the question is can you talk about other ones? For example, a 408a or a 457 plan. These are all retirement plans that your employer may offer. Maybe you're self-employed. You could do a KEO plan or an HR10 or a SARSEP. Again, these are plans for self-employed people. There's individual IRAs and Roth IRAs. These are all things that can be deductible to you if you want and if you choose. But you have to have a proper tax preparer help you do these plans so you have them, so you're ready for them, and they reduce your taxes. The 400 section of the code is the retirement section of the code where all the retirement plans sit. Okay, and what I mean by that is the tax code is literally 6 times my hand length. Okay, that's how long it is, 6 times my hands. And what happens is the 400 section is literally this thick, and that's where all the retirement plans sit. And what you want to do is you want to make sure you're maximizing your retirement plans so you reduce your taxes. Also to help you later, because the only thing that's going to happen when you're older is you're going to get Social Security, and by having a retirement plan, that will offset your money, or i.e. have more money for you. So when you're older, you won't have to worry about, oh, do I have enough money to live on? Okay. Top pay on Social Security for 2023 is about $50,000, which seems like a lot of money, but in order to get that, you got to be making $100 and something thousand to get that. So the question is are you going to have a shortfall in money or not? Okay. The second thing we want to talk about is education credits. These are common things people think. And people think, oh, education credits. I don't have a kid. It doesn't matter. Say you go to a trade school or take a class at night, like an adult class. That's an education credit. There are basically 2 types of education credits you can take, and you can deduct them both off your taxes. There's no age requirement or limit. Everyone thinks, oh, education, my kid goes to college. No, your kid does not have to go to college. You can go to college. You can go to trade school. You can do anything you want that furthers your career. Okay? It's an education credit. You're allowed to take it. It will reduce your taxes. You can see which one you qualify for. Maybe you went to college 20 years ago and there wasn't the American Opportunity Act. Okay? You can take it now. Go back to college, take a class, get a master's degree, reduce your taxes. These are things you can do. The third thing everyone's talking about now is buying a new car because it's energy efficient. It's an electric car. I want a car. I want my car to drive really fast. Electric cars are really cool. And I also want it to be okay in terms of building my car so I can drive fast and reduce the energy greenhouse effect on the planet. Okay. Here's what happens. If you buy an energy efficient car and you transform your garage or your house, okay, you get a credit for it. Also, if you put new windows in your house or new doors in your house or insulation in your house, guess what? You can get it. Okay. These are things that will reduce your taxes so you don't have to worry about paying that much in taxes. And if you're not looking at these things every single year, you're in trouble. For example, maybe you just painted your house. Well, maybe you can qualify for the energy efficient credit. That's what you want to do. You want to look at it. So you want to make sure you sit down and look at all these different credits and see how you do this. Okay. The next one, I apologize, really only deals with people who have children. It's the child care credit. If you have kids, you get a credit. You would not believe how many people come to my office and leave that off because their previous tax person didn't tell them about it, or they didn't mention it, or didn't think they qualified for it. The child care credit is up to $2,000 per kid, as well as there's a daycare credit as well that goes with that you could do if your kid goes to daycare. Now, your kid doesn't have to go to a formal daycare like, oh, my kid may drop my kid off in the morning, pick up. They can go to after school care or soccer or the YMCA or the YMHA or the JCC or something like that, where they're being cared for while you're at work. This is a credit that you can take that will reduce your taxes. Okay. These are things you want to look at to make sure, again, these are 4 credits I just mentioned that a lot of people don't take, and you want to make sure you take advantage of them. Okay. The next thing we're going to talk about is medical costs. Now, some people say, oh, these all went away when the Tax Cut and Jobs Act. Well, it didn't go away. It's just that a lot of accountants just kind of skip over it. A lot of people skip over it. Okay. medical costs still are deductible on your state for most states, and they're still acceptable on the Schedule A. But if you don't fill out a Schedule A, you're going to do yourself a disservice. That's one of the things you want to look at and make sure that you are doing the right thing for yourself. Okay. And again, a lot of accountants miss this. They go, who cares? It's not worth it. It's not that much money. Well, you want to make sure you do it. And what are medical costs? Well, medical costs are the traditional medical costs in that you go to the doctor and you pay your copay and the drugs and vitamins that you get. But other things like lip balm and lotion you get, okay, doctor prescribed, are allowed to be deductible off you. Glasses, braces. Oh, my kids have braces. Yeah, we want to get those too. Okay, those are things that you want to look at to make sure that you have enough stuff there to reduce them, okay? Another thing that happens is what's called theft loss or casualty loss. Right now, with the earth heating up or so-called global warming, people are all excited about, oh, we had this storm here and it wiped out everybody. That's a theft or casualty loss. You can deduct that off your taxes, okay? Or for example, let's say you gave somebody money and you lent them money and they didn't pay you back, or you made an investment in something and you lost money. You can get it back off your taxes, but you have to know how to do that. And when I say know how to do it, yes, you rely on your tax professional, but maybe your tax professional doesn't know. That's why you need to call us so we can help you figure out if you qualify for that. Here, we're primarily located in the East Coast, and we have hurricanes and tornadoes on a regular basis here. And guess what? All of our clients qualify for theft and casualty loss. So you should too, at least look at it. Just look at all the storms that are happening all across the United States, all over the place, okay? And every single time the president comes out and says, this is a disaster zone, and you can qualify for aid. That's a theft and casualty loss. That aid goes off your taxes, reduces your net income off your taxes, so you don't have to pay any tax on that money. It's a really good thing. You got to make sure you take advantage of it. The next thing people say is, oh, the charity went away. No, it didn't go away. People just don't know where it goes now. It's on a different line. It got moved. And a lot of accountants go, it's only worth $200, not worth it. No, it's $200. If you saw $200 lying on the street, would you pick it up? I know I would. Okay. And actually this year for 2023, it's actually $300. Okay. Well, it's kind of $250, $300, whatever, you need receipts. But imagine you go and if people say, oh, I just throw the things in the bin. They take the bag of clothes and throw it in the bin. That's deductible. You're allowed to take it. Or if you donate your time, okay, to the food kitchen on Thanksgiving or on Christmas, like a lot of people do, you can deduct that, okay? But you have to talk to your accountant. And when I say accountant, your qualified tax professional knows where these numbers go to make sure that they take all these advantages for you, okay? Next thing is people say, oh, I have a financial planner. I can't deduct their fees. That's totally wrong. Totally wrong. And I see it all the time. And then the clients go, I didn't know I could deduct it. You can totally deduct your financial planning fees, okay? But again, you have to talk to your qualified tax professional and say, hey, can I deduct these? Where do they go? And a lot of accountants don't know where these things go. So you want to make sure you go to a qualified financial person or qualified financial tax person who knows where these items go, so you can make sure that you deduct these and you get the maximum deduction you can get. That's the issue. How do we make sure we get the maximum deduction? We go through these line by line and ask you questions to make sure that you are deducting all of these things, okay? The next one is a lot of people recently got laid off in their jobs. And they're sitting there going, oh, it's taking me forever to find a new job. I can't find a job. No, you can find a new job. And your job search costs can be deductible. Okay, but you have to know about it. And if you don't know where they go, guess what? They're not deductible. So you need, again, to talk to a qualified tax professional who knows where the job search goes so you can do it. Okay, one of the last ones, which you always like to talk about, is tax prep fees. Oh, well, my accountant told me they went away a couple of years ago. No, they didn't go away. They got moved. Okay, and a lot of accountants just rely on their software and don't do the work. Okay, tax prep fees can be deductible to you. Okay, but again, you have to go to a qualified tax professional who knows where these things go and put them together. I just mentioned 10 different deductions that you can take off your tax return that will reduce your taxes. If you're not using a qualified tax professional to reduce your taxes, you're doing it wrong. What I always tell people is give us a call. We're happy to do what's called a free look on your tax return, no cost, where we'll sit down and look at your tax return. You can email it to us, whatever it is, doesn't matter. And we will look at your tax return and look for hidden things that you may have left off. And maybe we change them, maybe we don't. Also, as you can see, I've written 4 books. Okay, so feel free to call us and get one of these books. We're happy to do it. Order them online. And as always, thanks and make it a great day.